Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I do each and every week, I've left my lines on the chart so you can see how accurate technical analysis is, especially when it comes to candle charting. It's a great forecasting tool, but most importantly, it's a great risk management tool for those who are looking to protect their account from any surprises in the market. Right now, as you zoom in here to the chart, you'll see this was my forecast line from last Friday, where I said the markets would sell off this week, and the markets did just that. We sold off Tuesday, Wednesday, and Thursday. Remember, we had a shortened trading week this week because of the holiday on Monday as we celebrated President's Day. But the price did not reach the target, which was the end of that line. In fact, what's happened on Friday, right here as I record this on the 23rd, the market rallied quite nicely towards the end of the day and closed right above that 20-period moving average. You see right there, that blue line represents the 20-period moving average. Up until today's trading, the moving average was acting as resistance. And you can see as it closed above that blue line, that really creates a shift in the momentum towards the upside. So the forecast for next week is going to be pretty easy on this one, because as I erase this line, I'm going to draw lines in this upward direction right here, with the end of that line being the target for next week. Now, there's a couple of things that pop off the chart that you need to know about. Number one, there is an open gap above the market right there around 264. Remember, that's the Dow Jones ETF. So that's going to represent the Dow being close to 26,400, maybe 26,500, because the Dow Jones ETF is 1/100th of the actual Dow Industrial Average. So that is the forecast for next week. So if you are looking to buy across the board, this is giving us an indication to do that. The only thing that I would be looking for as a 100% buy signal is that we really wanted to see higher volume on this buying activity. The fact that there is no shadow or vertical line that shows above that body right there, that tells us that the buyers were buying right up until the close of the day. If I shift this to an intraday chart, you'll see exactly what we're talking about. This is a minute by minute chart, and we rallied right around 10 o'clock, about a half hour after the market opened. We continued to see the buyers come in right up until the close, and even in this gray area we see buying action in after hour trading. So the buyers are still in force right there, and we have that forecast line to the higher levels. Now you're going to see a similar pattern throughout all the markets. You see the Russell 2000 right here. The market sold off earlier in the week, but then we came back with a very strong candle on the Russell 2000. So that totally negates this downward target as we now focus to the upside, because the Russell 2000 also has a gap, which I'm going to put as a target right here. I'm not going to say it's going to happen by next week, but if I leave this in place as a 2-week, maybe a 3-week target, we could see the Russell 2000 reach to fill that gap and maybe even test the record highs right there. So again, the momentum has shifted to the buy side, with the Russell 2000 even closing over that 20-period moving average. Now towards the end of this report, I'm going to give you a link that will help you understand more about the moving average crossover method and how we look at the 20-period moving average as a tool to generate buy and sell signals. Now if we look at the spiders, this is the S&P 500 ETF, not quite as broad-based as the Russell 2000. It tracks 500 stocks. You could see that we did sell off, like I said we would, but we didn't hit that target. So we're going to erase that line and establish a new target, which is going to be to the upside. See right here, we also have gaps above the market on the S&P. Gaps will fill 80% of the time. In other words, what that means is 80% of the time the gap is going to fill. That's not 100%, because if it were 100%, we wouldn't have to worry about the downside risk. 80-20 rule applies here, which means there's an 80% chance the gap will fill, 20% chance that it might not fill. So we have to always approach the market with caution and protect ourselves with trailing stops as we buy into the market, and we trail those stops up. Now if we look at the Qs, this is the tech sector. There's a lot of interesting news that came out, some news of mergers and acquisitions this week, which helped drive the market higher. You can see that the Qs close with no shadow above the candle, telling us we closed on the highs. And unlike the other broad-based indices, we close on higher volume. That tells us that the buyers are moving in with force. So I'm going to erase this line, and I'm going to stretch a little bit on the Qs. I think next week we could, and maybe even into the week after next, we can break into new highs and actually break through that high right there that we're putting a target line right there. The horizontal line represents the area of resistance. My target is that we will eventually break through that resistance and go to higher levels. Now let's take a look at the VIX. This is very interesting. The VIX is a leading indicator. We broke down below support, although we rallied a little bit early on in the week with the VIX. This forecast line is now going to shift. We're probably, because now we're breaking down below support on the VIX, we'll erase that line. I'm going to say that the VIX is going to drift down and hit that target support, which is a roll reversal support level. So we've already talked about gaps. We've talked about roll reversal. We've talked about the 20-period moving average. And so if you're interested in learning more about those things, just go to the Market Guys website right there. Click on the video tab. It's right at the top of the page. It will bring you to a library of videos called Market Shots. As I scroll down here, you'll see the topics that I talked about. You see trading the gap. That's one you definitely want to pay close attention to. You want to see the roll reversal, which I mentioned right there. And finally, if you scroll down a little bit more, you're going to see the video link for trading the moving average. And that's the 20-period moving average method for trading in and out of the markets. Very reliable strategies. These are the main strategies that I've used now, well, over 35 years now. And I could tell you from experience, these are what we teach to our clients, to our followers, to the audience. And if you pay close attention to the video tab right there and go through all these videos, you're going to get a really good education. And this is absolutely free. We make that open to the public as our gift to you, so that you can learn more about how to trade the markets with authority, just like the pros do. So thank you so much for joining us at the Market Guys. Stay touched, and we'll put out a report next Friday, again, at the end of each week, as we do always. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.